Today's focus is the fact that there's something called a 780 call on Tesla, and there were 29,000 of them yesterday. But today, if you look at the option string, you'll see that that number is down to 4,000 units because there's a lot of money that was sitting out there on those calls. I decided to concentrate our attention on the 800 puts and calls for today because I think there's a lot of profitable lessons we can take from it. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy our show and would like better information on investing and trading, please join us over on Patreon. Those of you at the $100 or above level get a show every day with different thoughts and strategies that I think you'll find helpful in your investing process, especially now that we're heading into earnings by the end of the month. So I wanted to also note this is a copyrighted broadcast. Any use of the information provided is prohibited. And we also want to encourage you to like and subscribe if you would. So we've been doing kind of this series called Top Secret Trading. In general, the whole idea of top secret trading for Tesla was to sort of look at the trends of Tesla and see if we can draw lessons from it that would be profitable for you. I've been kind of stuck on shows this week for a couple of reasons. Number one, I really like watching shows where you have these people that know everything's going to happen and they tell you, and it does happen. We've had some success like that, but we're probably running at about a 50%, ish 60% zone. But the challenge is that, do you miss the opportunity for lessons, or do you wait until you have everything absolutely perfect? So I chose Stanford as my part of my title today because there's actually a guy named Jeff Pfeiffer who is one of the top professors at Stanford Business School. Jeff wrote a book called Managing with Power, and he's one of the best-selling sort of authors from our business school, and I think you'll find that book to be awesome, or anything he writes. I've met with him maybe 20 times over the years and read several of his books, and it's under the Harvard Press, the one I just mentioned. So one of the arguments Jeff makes, and that drove this show, is the fact that it's one thing to actually know everything that's going to occur. It's another thing to just understand the environment you're in. So that's the goal for today, is sort of review the environment we're in and allow you to perhaps draw little bits of information there that could actually enhance your investing and trading. So again, Jeff Pfeiffer, Stanford Business School, Managing with Power, one of 20 books he's written, several bestsellers, amazing guy. So I wanted to cover a few things today. The first thing is there's actually this issue going on of, wait a second, what happened to our nice bump in stock price driven by the fact that Tesla just delivered some great numbers? And not only that, what happened to our 3-day rule off those numbers? So the answer I'm coming up with from this is the fact that since the S&P has arrived, the rules of Tesla have completely changed. And as we develop time between when S&P happened and then more quarters of information, the data flow has been completely different. And there's a process that I'm doing / we're doing where there's how do you collect the data and allow your data to catch up with what the new reality is. So this past weekend, the number one thing I kept thinking was, how are the market makers, after great numbers from Tesla, going to figure out how to keep all the nice increase in the value of the stock to themselves and screw all the smaller investors out of that cash? And so in my mind, what this meant was that, hey, Tesla with those good numbers, should be over $800 a share, nicely in the 820 to 850 range. But the problem is, one of the things that's developed is this process where instead of us getting our nice 3-day rule, you make some money on the options and you're gone, we've now entered this zone where the 3-day rule has turned into the 3-week rule, where all of a sudden, we're seeing, these unusual activities. And one of the suggestions I would make is that there's this issue of what I call, or what is called, order flow. So if you'll recall, there's an investigation going on right now between the government and what's going on with a number of discount brokers. And the investigation focuses on a concept called order flow. So for example, if you're, let's say TD Ameritrade or E-Trade or any of these companies, and you have investors like you or me that are trading a certain instrument, one of the competitive advantages you can get is that if you're sitting there watching screens and you know how many people are trying to buy a certain stock or sell a certain stock or sell a certain option or buy a certain option, you have a competitive advantage of information because you can do stuff like front running, where, hey, if I know your order flow, I can tell if that stock's going to rise or fall, so I can buy or sell ahead of you prior to the trades from the investors hitting. And so that concept is called front running. And in essence, you have the opportunity for the market makers who are handling those trades for you when that order flow was sold to me to, in essence, say, let's say your name is John, and John wants to buy 100,000 shares of Tesla, for example. Well, guess what? If you're going to buy 100,000 shares, and ideally you want to buy those shares as close to the market as you can in terms of the bid ask, but the people who've bought your order flow could say, hey, I'm just going to go ahead and I know this person is trying to buy 100,000 shares, but what I can do right now is front run them. I can go in and take the order flow from, let's say, E-Trade or one of these other companies, and I can say, oh, when you add up all the shares being purchased, that's 1 million shares or 2 million shares that people are trying to buy. Well, if everybody's trying to sell, I can short the stock and make a little money when it dips. Or if everybody's trying to buy, I can actually front run and buy ahead of them and then put their orders through. And I make X amount incrementally because I have control of their order flow. So it's almost like a jump rope thing. There are all these different ways you can make money if you know what a whole bunch of people are going to do before they do it. So this is kind of one of the challenges of keeping a larger account in the discount brokerage space, is that you have this problem of the big banks and money center folks go direct to market to handle trades, and particularly for larger people, it's against the law to front run. But if you're a discount brokerage person and they're taking your order, mixing it with thousands of other people, selling that order flow, you're gonna have all these potentials for crazy things to happen. And most of those potentials are, yeah, you're getting that free trade, that's true. But what if you're paying incrementally 1, 2, 3% more for your trade because of how this order flow process works? And so the other thing is something called creativity. So note, this is the easy way to understand how all this works. There are some brilliant people that sort of run the Wall Street banks and run the hedge funds, etc. And those folks can come up with very creative ways to sort of leverage the competitive knowledge information into more profits. You could buy shares ahead of the person. You could buy calls against the stock and wait for it to rise up and then sell it because you know there'd be an incremental bump in price. There are all these things that can occur, but it's good for you to understand what's happening. And this is one of the reasons why I encourage you, if you have a more than $1 million account, at least have a million of it or a nice block sitting in another firm like a Goldman Sachs or I guess I would avoid all the problems they're having at Wells Fargo, but like Chase, like, you know, there are all these banks you could choose from. The basic idea, though, is that you might want to try doing a trade from both of your sort of servicers. And if you put the trade in at basically the same time, watch the execution. Are you getting a better price? Are you getting better turnaround time on your trades, etc.? So this is just a general thing you should be aware of. And whoever gives you best execution, shift more money towards them, but you want to have a couple of different places. The other thing I wanted to say is I've met a few of you who have multiple $1 million accounts, and I want to say shame on you. And the reason is that there are certain thresholds that the big banks have, like a Goldman, I think it's $5 million. Like Bank of America, it's probably $1 or $2 million. And you become part of the private client group. So once you're a large enough account, you get access to IPOs and all these other services for free because of the size of your account and the fact that you do some trading, perhaps, because their incentive is to find things that you think is valuable and bring it to you, and you don't get that benefit with the discount brokers. But in theory, you get better fees. It's at least go to the private client group information on the top 5 banks and read about services rendered for people with larger accounts. I think you'll find out that you're losing a lot of money by not leveraging access that you get because of your larger portfolio. So today, I specifically was trying to not dive into that. I'm really diving into what's happening at the 800 call and put level for Tesla. Well, the thing I was stunned by is last night, I've been sort of, I'd say, confused. The reason I've been confused is that how can Tesla's stock price not be up $50 from when they announced the numbers on Saturday? I think this is ridiculous. And the reason I think it's ridiculous is that a lot of people are staying away from Tesla because there's a discount because we don't know what Elon's going to do. Is he going to crash the company? The more successful the company is, the lower the chance that we're going to see this crash. And therefore, Tesla's supposed to get all the benefits of its growth rate and the profitability it's enjoying, which it has not been. And so, particularly as the new facilities open, it confirms that Tesla is a dynamo that everyone should invest in. So what I kind of wanted to look at today is, last night I saw something. There's something called a 780 call. So if you go over, type in Yahoo Finance Tesla, middle of the page under options, and look down in that string to the 780 call. Last night I looked at this about 2 in the afternoon, and there were 29,000 of them. And I was like, whoa. So what I usually do is within 50 to 100 points up or down, you're looking for significant points of options. So anything over 5,000 options, either on the put or the call side, very big deal. And I looked and I was like, wow, 29,000 calls at 780 with only 24 hours before it expires. Totally amazing. So I was stunned that people were willing to take that much risk. So in theory, without even looking at it, we've already discussed the fact that you price an option because there are 3 components. There's the time value, how much time before it expires, how close is it to the price of your option, and implied volatility. So particularly with Tesla having, its shareholder meeting yesterday, Elon making comments that it could have moved the stock dramatically. Stock finished up at 793. It's started out lower than that, but this morning it closed in on 800 and then dropped back. So I just think this is amazing. The 780s are an amazing number because think about it. If the stock opened at, let's say, 792, and then it spiked to almost 800, 798, sort of pre-market was what I saw. That meant that there's a whole bunch of people who are making a killing on their calls with 50, 100%, easily in a few minutes. So if we had the chart in front of us for the day, I was watching this and I was like, no comprendo in Spanish is what we say. And what I couldn't understand was if there are 29,000 calls at the 780 level and the stock is at almost $800 a share, that means those people are making a ton of cash. And what I kept thinking to myself was, I see it, but I kind of don't believe it, because the market makers have an incentive to pull the stock below 780 in order to wipe out all the people that are making a killing. And as it got closer to 800, I was thinking, wow, it looks like a new day has arrived where, you know, everything's going to be great. A lot of people are going to make a lot of money that are smaller entities. And I think this is terrific. So I was like, okay, that's how the day's going to go. So then I look back and all of a sudden it's at 785. Stock has fallen almost 15 bucks in an hour and a half. And so then I was like, oh, this is a stunner. And then I just went back and looked. And now instead of 29,000 calls at the 780, we now have a grand total of 4,500, with 2,500 traded. So there are a lot of people that exited their positions profitably. And now the whole landscape has changed, dramatically from 29,000 to 4,000 units out there. It's a huge, shift in numbers very quickly. And so I was sort of searching around for where are the big numbers still. And if you look, you'll see that there are 20,000 calls. Even now, it's in that noon time frame. There are 20,000 calls out there at the 800 call level, and there are like 4,500 puts at that level as well. So obviously those numbers are way different. A call that last I just checked within 15 minutes, and it's approximately 10:30 here Eastern now, or 10:45. So the issue that comes up is the puts are now, with the stock where it's at, the puts are selling for $1,500 a piece. The calls are selling for $125 a piece. This morning at the open of the market, when the stock was at 796, Tesla's 800 calls were up in the $300 to $400 a piece, and the puts were slightly above that because we were so close to 800. So in this case, the puts actually went from approximately $400 a piece when the stock was at 796, 97, 98, to now they're at $1,500 a piece when the stock is down at 785. So I wanted to sort of review these numbers because those are very, very big numbers, very big swings, very lucrative. And so in theory, if you're spending if you're spending $400 on a put for Tesla that expires today, that sucker went from $400 a piece to $1,800 a piece in about an hour, and that's 4 times your money. So for everybody else, it's a total waste of time, but this illustrates my point about learning the bias, and then you can kind of see what the stock is going to do. And this is why I like the charting, I respect the charting, and I love it, etc. But I feel like a way better chart is sort of the implied direction based on market maker optimization. I think is a more valuable thing, because when you look at 20-day moving average, 200-day moving average, all those numbers, the bots can handle that, and they can dominate it on behalf of the large institutions in ways they can't fully when we get into this discussion of the implied price point based on the volume of puts and calls that you might be seeing. So where are we right now? So if I were to say, what do I think is going to happen today? when I saw those 29,000 calls at the 780, after I saw that yesterday afternoon, I was like, I don't know how they're going to do it, but they're going to figure out a way to have this thing close below 780 because there's a whole bunch of calls at 780, 790, 800, 820. All these calls are going to be expiring worthless. So if you were to say, well, what do you absolutely think the close will be today? If it was yesterday, I would say absolutely below 780. But now that a whole bunch of people have sold off their positions, I think sub 790 but above 770 is where we end up, particularly with the market being neutral. You know, the fact that we're not oil prices aren't crashing or rising dramatically. Everything else is neutral. So now we get a chance to see, well, what are the market makers trying to do and why? And so my assessment of things right now is every 10 bucks, $5 or $10 down for the stock price is more people whose calls end up worthless. So if you'd asked me yesterday where it was going to end up, I was like, no doubt 780 because we had 29,000 calls at 780, and there are a lot of people who are making great money on them. And now we're almost half the trading day finished. Stock dropped below 790. 85 is what I saw. But my goal wasn't necessarily to specifically focus on a number. My real goal was to just generally bring the idea forward that I really feel that it's a better guide on the stock price to understand what the market makers are trying to accomplish than just saying, let me whip out the charts and that'll be the focus of my day. Now, do the charts work? Absolutely. Is it something that you want to keep an eye on as you're working? Absolutely. The challenge, though, is that I really feel like the charts are too easy for the bots to use as a tool, and therefore, I think they're riskier. I therefore think that blending those charts with other information to make better decisions, I think is a good idea because of how good those computers and AI have gotten. The predictable stuff, it makes it harder, I think, to make money, and therefore you have to broaden your horizons in order to get success on this. So the question is, why bother with all this? The answer is, hey, if you're sitting there and this stock is just about at 800 and you're like, it looks like it's going to pop over, and this is the third time this has happened in the last, let's say, 4 or 5 business days, where the stock pushes towards 800 and then drops back into the 85 zone, there are certain people that are seeing this trend about where things are going and picking up 2, 3, 400% of their money in the process. And I want that to be you. And if you're able to see the landscape of what's happening, I think there's a higher potential that you sort of get into this. Now, the stuff I'm giving you is lightweight compared to, if you read below, we list Taleb's book, and this is what he specializes in, is the theoretical framework behind all of this. And I think it's worth your knowledge gain to get the book and then watch some of his videos and understand what he's talking about, because I think it could be very lucrative for you. So where do I think we should be? In the 850s is where I think we should be. How come we aren't there? Because we're in the S&P world now, and there's an ability of the large firms to control things, and I think slow down the process of seeing the numbers that we normally would, because they have all kinds of techniques that they can use, and they have the money, manpower, excellent, to execute it. But I think you're at a competitive disadvantage in the short term, but as a long-term investor, you kind of duck all the capabilities they have of jamming the smaller investors, and therefore they can make a killing, but you can make a killing too if you could figure all this out. But I just wanted to highlight kind of what was happening today and allow you to sort of draw some information that you might be able to use to invest and trade better. So I want to thank you for taking time out to join us. We do have some SpaceX shares. We also have, want to thank our Patreon supporters. I encourage you to do so as well for more information on better investing and trading. We also want to encourage you to like and subscribe. Admin at Teslafaninsight on PayPal is our location. It's listed below. If you'd like to support the channel for the trading lessons, it can be very expensive, but you know, $8 or $9 would be appreciated if you feel like the information is valuable and it's helpful in your investing process. At any rate, want to finish up with our health tips for the day. I'm kind of obsessed with sugar right now. I took a couple of weeks off of sugar. I'm introducing it a little bit in my diet again, but working on keeping it out because I'm really impressed how your taste buds change and you want less of it. And that's working great. So I think I'm going to try going back into it again. I saw a video yesterday that I was fascinated by, which is on YouTube now. Because I've been looking at health stuff, I'm getting all these pop-ups. And one of the things that I saw yesterday was a story looking at the difference between high fructose corn syrup and sugar. And what I kept thinking about as I watched this video is we actually have a doctor advisor to our show, and he made a comment where he said, look, there's a problem that we have with our bodies. We're working with a 2,000-3,000 year instrument, and there's a whole bunch of new stuff that they've created in the last 30 to 50 years. And the trend is that your body will say, oh, there's some new stuff here. Let me take it. You can take it in and it tastes just like sugar, it tastes sweet. But guess what? We don't know what it is. So we're just going to store it near your organs and give you type 2 diabetes because the substance you're consuming has nothing to do with what your body has been sort of preparing for and working with for the last 2,000 years. So this is one of the reasons why he recommends do not eat more than fried foods more than once a week. And there's a lot of recommendations that you avoid these newfangled things that you can't pronounce. I can pronounce high fructose corn syrup, but the challenge is how's your body reacting to it? So that's why a lot of people are going back to sugar. He gave this nice talk where he focused on the fact that high fructose is just what it is, fructose, and it tastes just like sugar, it's just as sweet. But then I started thinking about the stuff I read about where one of the things about high fructose corn syrup is in case of sugar, you kind of feel like, oh, I've had enough. With high fructose corn syrup, instead of that, you start to crave or demand more anytime you have it. So that's one aspect of it I thought was interesting. But I'm not claiming to be an expert. I'm just pointing out that this is a substance that is unfamiliar to your body. And the question is, we know for 3,000 years what sugar does or is relative to your body's reaction to it. We don't know all these brand new cool things that have been developed are pretty good ideas. They taste pretty good, and it's not sugar. So in theory, it should be better, but your body may not have the same opinion as the scientists who came up with it. And we don't have enough data yet to know what that is. But we are finding that avoiding all the new stuff tends to allow people to live better lives. So it might be something good to consider. We have other health tips below, and I encourage you to review and try and let us know what you think of them. And if you're a doctor, we definitely want to hear from you in terms of suggestions for health tips for our viewers. Also wanted to remind you prior to lovemaking, don't forget, do not eat a giant meal and try to lovemake. What you want to do is have a small salad prior to lovemaking and see what the impact is, because you'll notice that the blood flow that would be trying to digest that giant meal doesn't have to happen. And now you have all that blood flow available to the rest of your body for your enjoyment. Another thought to consider. At any rate, this is Greg for Teslafaninsight. Tschüss German, au revoir French, Lehithro, Hebrew, Hoda Hafez Farsi Trasiche, Russian, Ni hao ma Chinese, Konbanwa Japanese, Hey Do Swedish, good day our friends in Australia, Arrivederci in Spanish, and Salam, and Namaste Hindi. Have a great day. Bye for now. Thanks for joining us.